The world of cryptocurrency is no stranger to volatility, and Bitcoin, the flagship digital currency, has once again demonstrated its capacity for dramatic price swings. After enjoying a period of relative stability, Bitcoin has experienced a sharp decline, leaving investors and analysts grappling with its implications. This recent downturn comes amidst a wider market retreat, fueled by a confluence of factors, including geopolitical uncertainty and renewed concerns within the cryptocurrency sector itself. Bitcoin's descent has been notable for its speed and severity. In a matter of days, the cryptocurrency shed a significant portion of its value, plummeting to lows not seen in months. This sudden reversal of fortune has shaken the confidence of some investors, while others see it as a buying opportunity. Understanding the factors at play is crucial for navigating this turbulent period in the history of Bitcoin. The cryptocurrency market, often touted for its potential to disrupt traditional finance, is once again facing a test of its resilience. While the long-term prospects of Bitcoin and other cryptocurrencies remain a subject of intense debate, the recent market downturn serves as a stark reminder of the risks inherent in this emerging asset class. One of the key drivers behind Bitcoin's recent woes can be traced to the escalating trade tensions between the United States and China. President Trump's pronouncements on tariffs have injected a significant degree of uncertainty into global markets, prompting investors to seek safer havens for their capital. Bitcoin, often perceived as a risk-on asset, has borne the brunt of this risk aversion, with its price exhibiting a strong correlation with the ebb and flow of trade war anxieties. The imposition of tariffs, or even the threat thereof, has the potential to disrupt global supply chains, increase costs for businesses and consumers, and dampen economic growth. In the face of such uncertainty, investors tend to flock towards traditional safe haven assets, such as gold and government bonds, which are perceived as being less susceptible to economic shocks. Bitcoin, on the other hand, with its relatively short track record and inherent volatility, is often seen as a riskier proposition during times of geopolitical turmoil. The interconnectedness of global markets means that events in one part of the world can have ripple effects that are felt far and wide. Bitcoin, despite its decentralized nature and aspirations of operating independently of traditional financial systems, is not immune to these global forces. As the trade war between the world's two largest economies continues to simmer, it is likely to cast a long shadow over the cryptocurrency market, influencing investor sentiment and shaping Bitcoin's price trajectory. Beyond the geopolitical factors at play, a closer look at Bitcoin's technical indicators reveals a confluence of bearish signals that have been flashing red for some time. One such indicator is the 200-day exponential moving average, a widely followed technical indicator that measures the average price of an asset over a specified period. Bitcoin's decisive break below this key moving average is widely viewed as a bearish development, suggesting that the path of least resistance for the cryptocurrency is now to the downside. Adding to the bearish sentiment are the weakening support levels observed in Bitcoin's price action. Support levels are price points where buying interest is expected to be strong enough to prevent further declines. However, the recent breakdown below several key support levels has emboldened bears and raised concerns about the potential for further downside. These technical breakdowns, coupled with the bearish crossover in the moving average convergence-divergence indicator, paint a picture of waning bullish momentum and a possible shift in market sentiment. The increase in trading volume observed during Bitcoin's decline is another noteworthy development. While increased volume can sometimes signal heightened buying interest, in this case, it appears to be driven more by panic selling than by bargain hunting. The spike in trading activity on major cryptocurrency exchanges suggests that investors are rushing to exit their positions, further exacerbating the downward pressure on Bitcoin's price. As Bitcoin navigates this period of heightened volatility, the cryptocurrency market finds itself at a crossroads. The recent price decline has undoubtedly shaken the confidence of some investors, leading to questions about the long-term viability of Bitcoin and other cryptocurrencies. However, seasoned market observers caution against drawing hasty conclusions, reminding us that volatility is a hallmark of emerging asset classes. While the short-term outlook for Bitcoin remains uncertain, the cryptocurrency's long-term prospects continue to be a subject of intense debate. Bullish analysts point to Bitcoin's underlying technology, its limited supply, and its growing acceptance by institutional investors as reasons to remain optimistic about its future. They argue that the recent price decline is merely a temporary setback in Bitcoin's journey towards becoming a mainstream asset class. However, bears counter that Bitcoin's lack of intrinsic value, its susceptibility to regulatory crackdowns, and its vulnerability to market manipulation, make it a highly speculative investment. They argue that the recent price decline is a sign of things to come and that Bitcoin's bubble is finally bursting. Only time will tell who is right. In the meantime, investors would do well to proceed with caution, recognizing that the cryptocurrency market remains a highly volatile and unpredictable landscape.